Here we are on the Aussie dollar CAD 15 minute. It's a live trade I've just got in, which is a bullish flag pattern, and this is for projected targets going to be quite a nice risk to reward. But what I'd like to do first of all is run through the higher time frame analysis. Just before I do that, let me zoom in a little bit here so that you can see this. Here's our entry here at 93.66, stops at 93.44, targets up here at 94.23. And what I'm going to do is I am going to, I actually don't want to delete everything. It would take me about 10 minutes to rework everything out. So let me just see if I can do this from the 60-minute time frame. And hopefully I can talk you through this without it being too confusing, because there's quite a lot on the charts. No, actually I'm going to delete everything because I have a complex pullback that I'm waiting for. So we have been in trend to the downside, but what I'm looking at right now is I'm looking at the market going higher, and purely because we've had a violation to the upside and I have a bullish flag pattern which is telling me that we could break to the upside as well. So this complex pullback, which in a moment you'll see actually runs quite nicely into the targets of our flag pattern. So you can see we've got a 1618 up there. We do have a 1414 extension as well coming in at that zone just above it. And there we go. We do also have a trend line which you can follow like this. It was there, wasn't it? Okay, and what we have done here is this was our high, we pulled back, and then we've now come up to this point and violated this this high. Now this is only a violation because for me the overall bias is still bearish here. Okay, so what I'm then looking at is, if we zoom in, you can see that we've got a very nice rally, and what we're seeing is the market pull back. Now I'm just going to drop to the 15-minute time frame, and this is where you'll be able to see the flag pattern. And so if we draw on our lines looking like this, make sure we get those correct, we can see that we have now come up for a touch here, 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 and now we've come down here for another touch. Now I've been able to get relatively quiet stops here because, first of all, if we put a fib on, we can see that we have a 618 the market has just come into, and this is one of the filters I use for these flag patterns. Sorry guys, my mouse is on the way out and I have to click about 10 times for it to work sometimes. So one of the filters I use for the flag pattern is it has to come into a 618. It has to touch a minimum of twice on either side, and then when we come to test the trend line, we actually need to hold, and then I need a bullish candle, and here it is. It doesn't need to be a high close, it just needs to not break the trend line to the downside. Now if I also put a structure level on here, and I'm just going to make this yellow, then you can actually see that we have come into this level of support, and if we look left you can see here as well. So we've got a two-touch flag coming into an area of support. We've held the trend line, we've had a positive candle, we've hit the 618 fib, we've had an initial structure high up here above this level, and my overall bias right now is that we're bullish in the short term until we reach this higher trend line up here, which will be the completion of this blue AB equals CD pattern, which means that we have a projected place for targets. We also have 2 fibs coming in at that level, and if we also throw on another fib, which is from our swing high to our swing low, you will see that we have a 127 just coming in below all of that. So a very safe place here to go for extended targets. So in terms of the risk to reward, then what does it mean? Well, if I bring these back on and remove the VS1 levels, come on, okay, it means that we're risking this much. I'm going to make that red, and in terms of risk, this is looking like 22 pips. And then in terms of reward, I am going to play for that 127 extension. That's going to be 55 pips away. $58 pips away, and I'm just going to make that green. Come on, mouse, there we go. Okay, so that's the trade. I will set an alarm to come back and see if we can hit targets, or if not, we go ahead and hit stops. I am playing this only as a 2-touch flag purely because of the setup and the way that it's formed. And if we come down to this level of structure here, you can see it here. I've got my stop 4 pips below this low, which is below the 93.50 psychological number. Anything ending in 50 or 0 is a psychological number to me. And so if we were to come down and get stopped out, well, we could see a move all the way down to retest the lows, and that would invalidate completely the pattern for me. So very good risk to reward there. We will come back and hopefully see if we can get these 55 pips out of the market. And we're back. Just a little update. The time now is 10 o'clock at night, and the update is that not a lot has happened. We came down for 1, 2, 3, 4 tests of this structure level here, and once again we've now broken out of the channel. So this will be the last update of the evening. I'll come back tomorrow and hopefully see this thing be well on its way to targets. And we're back, and the time now is almost 9 o'clock, and what has happened here is that we have now come up. We had this long wick test candle up at the top of our flagpole, up at the 9400s level, and what we failed to do is put in a new high. And since then we traded sideways, and we've just put in a lower close. So what I've done in this instance now is, because this is quite a major level of structure, is I've actually reduced down the risk on this trade. So I have gone below the main swing low here, just 4 pips below there. So in terms of risk now, this has been reduced on this trade to just 9 pips, and our reward is still the same up there. And the simple reason for that is that we do actually have a selling opportunity on the 240 for the market to come back down and retest the lows, and so what I don't want to do is have more risk on the table than is necessary. We've already come in and retested the highs. We failed to break past it with the psychological number, followed by a lower close. So this is just risk management here, reducing down the risk to just 9 pips. We're back for the last part, and after me just completing a video on a trade that I got skunked out of for plus 41 instead of 115, I'm really pleased to say that after one heck of a battle, it doesn't look like it here, but these are hourly candles, we eventually rallied up to hit the projected target. So I'm very pleased. This was a winning trade for 59 pips in the end, and I am now going to be looking for shorting opportunities as we come into that trend line and that completion of the AB equals CD pattern. But for now, we held for targets, put us through pain. Lovely 59 pips on the Aussie dollar CAD.